General Motors has just fired the first massive shot in a full-scale truck price war, slashing the starting price of the Chevrolet Silverado by up to $10,000. Yes, you heard that right. 10 grand gone from the sticker price. This isn't some dealer gimmick or weekend sale. This is a manufacturer-backed price cut straight from the top. The Silverado, one of the most iconic and best-selling pickups in America, just got cheaper overnight, and that means the truck market as we know it is about to be flipped on its head. What does this mean for you? And how will Ford and Ram respond? Let's break it down. Here's the news. GM announced that specific trims of the 2024 Silverado, most notably the LT All-Star Edition and a few other popular configurations, are dropping in price by as much as $10,000. That means instead of staring at a price tag hovering around $53,000, buyers are now looking at a starting price closer to $43,000. For context, that's not just a discount, that's a reset button on truck pricing. GM knows trucks have been inching toward luxury car territory for years, and they're now pulling the rug out from under their competitors. And let me make this crystal clear. This isn't a cashback incentive that disappears in a month. This isn't a dealer-only markdown. This is GM itself lowering the MSRP. That's bold, that's aggressive, and it's a declaration of war on Ford and Ram. So why would GM make a move this dramatic? The answer lies in inventory, demand, and competition. Over the last 3 years, trucks have been selling like hotcakes because supply was short. Pandemic shortages, chip shortages, and pent-up demand gave automakers the perfect excuse to jack up prices, and buyers paid, sometimes over sticker. But that moment is over. Inventory is climbing. Silverado lots across the U.S. are filling up again. Trucks are no longer scarce, and dealers are staring at rows of unsold models. At the same time, consumer demand is cooling. Higher interest rates mean financing is brutal right now. A $70,000 truck at 7% interest? That's a monthly payment north of $1,000, and that's simply out of reach for most households. GM knows if they don't act, those trucks will sit. So instead of waiting, they're pulling the trigger with a headline-grabbing move to bring buyers back into showrooms. Now let's zoom out to the battlefield, the full-size truck market. For decades, this has been the money-printing machine for Detroit automakers. The Ford F-150, Ram 1500, Chevy Silverado, and GMC Sierra rake in billions in profits every year. Trucks aren't just vehicles, they're lifelines for these companies. But here's the reality. The market is shifting. The average transaction price for a full-size truck has ballooned to $60,000, $70,000, and sometimes even $80,000 plus for a fully loaded trim. At those levels, the buyer pool gets smaller and smaller, and in today's high-interest rate environment, the ceiling has been hit. People simply can't stretch their budgets any further. That's why this move by GM is so fascinating. They're acknowledging the ceiling and making a play to reset the narrative. And then there's the EV factor. Let's be honest. The Silverado EV, the Ford F-150 Lightning, and the Rivian R1T haven't exactly set the sales charts on fire. Between high prices, limited charging infrastructure, and range anxiety, EV trucks are moving slower than automakers hoped. That means companies still need to push gasoline trucks hard because that's where the money is. And if GM can undercut Ford and Ram while clearing their lots of gas-powered Silverados, they not only win sales but also set themselves up to reinvest in their EV future. It's a double play. Now, how do Ford and Ram respond? Let's start with Ford, the king of the truck world. The F-150 has been the #1 selling vehicle in America for over 40 years. Ford cannot afford to give up market share to GM, period. Expect them to come out swinging with incentives. Maybe it's $3,000 or $4,000 in cashback. Maybe it's aggressive financing like 0.9% APR or even 0% deals to offset those high interest rates. They may not slash MSRP outright. Ford tends to protect their pricing image. But make no mistake, they will respond. The F-150 XLT is the volume model, and if Silverado is suddenly 10 grand cheaper, Ford will have no choice but to sweeten the pot. And let's not forget, Ford is juggling more than just the F-150. The refreshed Ranger is coming online, and the Maverick is still one of the hottest budget trucks in America. Ford has to balance its full-size dominance with keeping its smaller, cheaper trucks appealing. Ram, on the other hand, is in a more delicate spot. Stellantis just rolled out the all-new 2025 Ram 1500 with that twin-turbo Hurricane inline-6, and it's a big investment. New generations typically don't get price cuts right out of the gate. They want to recoup that development cost. But with Silverado suddenly undercutting them, Ram can't just sit still. Expect them to lean on lease specials, loyalty cash, or dealer incentives rather than hacking MSRP. They'll try to keep the image of the new Ram premium while still giving buyers a reason to choose them over Chevy. But the longer GM holds this aggressive line, the harder it will be for RAM to resist matching. And don't think Toyota and Nissan are unaffected. The Toyota Tundra has been gaining ground with its twin-turbo V6 and hybrid iForce Max option, but Toyota plays a different game. They're lower volume, they pride themselves on reliability and resale value, and they rarely get into price wars. But if the Silverado is 10 grand cheaper, Toyota risks being the overpriced outlier. We might see Toyota quietly add more standard equipment or roll out targeted regional incentives to stay relevant. And Nissan? The Titan is already on life support, scheduled for discontinuation. This move by GM could be the nail in the coffin. If you're Nissan, how do you even compete when your truck is more expensive, less popular, and fading out of production? You don't. This accelerates the Titan's exit from the market. And what about the smaller trucks? Don't underestimate the ripple effect. If a Silverado can be had for low 40s, that suddenly makes a fully loaded Ford Maverick or Hyundai Santa Cruz look a little too close in price. Some buyers might stretch just a little more and upsize into a full-size truck, which means the compact truck segment could feel pressure as well. So here's the bottom line: if you're a buyer right now, you are in the driver's seat. If you've been eyeing a Silverado, you just got a massive discount. Negotiate from the new lower MSRP, and don't forget, dealers might stack additional incentives or offer better trade-in deals to move metal. If you're considering Ford or Ram, patience may pay off. Their responses are coming, and the longer you wait, the sweeter the deals could get. And if you're thinking of selling your truck, bad news. Used values are going to take a hit as new trucks get cheaper. That 2021 Silverado you bought during the peak pricing frenzy? It's worth less today, and it'll be worth even less tomorrow. This is a turning point, folks. The days of automakers pulling in record profits on every truck are ending. The pendulum is swinging back, and the power is shifting to buyers. For the first time in years, you can actually walk into a dealership with leverage. And with GM lighting the fuse on this truck price war, the only question is, how big will the explosion be when Ford and Ram inevitably strike back? Now let's take a deeper dive into the financial side of this truck price war, because it's not just about moving units. It's about billions of dollars in revenue, profit margins, and Wall Street pressure. GM has been enjoying fat profits for years thanks to Silverado and Sierra sales. We're talking margins of $10,000, sometimes even $12,000 per truck when demand was sky high and inventory was tight. But the second you cut $10,000 off the sticker, those margins shrink fast. So why would GM willingly give up that much money per vehicle? The answer: volume. GM is betting big on moving metal. They'd rather sell more trucks at slimmer margins than let those trucks sit unsold and rot on dealer lots. Because unsold inventory isn't just a nuisance, it's a financial anchor. Dealers get stuck with floor plan financing costs, interest builds, and eventually production has to be slowed down, which means factory shutdowns, layoffs, and bad press. By cutting prices now, GM is trying to keep the machine running smoothly. Trucks keep rolling out of plants, dealers keep their lots moving, and GM keeps their crown jewel product in the spotlight. But here's where things get even spicier. Ford and Ram are under pressure to protect their turf, but they're also strapped with massive investments in EV programs. Ford's pouring billions into its Blue Oval EV division, which, by the way, has been losing money, over $4 billion in losses last year alone. Ram is in the middle of launching their electric Ram REV while simultaneously launching the Hurricane-powered gas trucks. These companies can't afford to see Silverado suddenly steal tens of thousands of buyers because every lost sale makes it harder to justify those future investments. So while GM is eating some profit margin to grab market share, Ford and Ram don't really have the luxury of ignoring it. They have to respond, and fast. And let's talk about the psychological effect on buyers. Trucks have become insanely expensive, and buyers have been conditioned to believe that $55,000, $65,000, even $75,000 is normal for a half-ton pickup. But now GM has broken that mental barrier. Suddenly people are asking, why am I paying 70 grand for a Ford Lariat or a Ram Limited when Chevy just knocked 10 grand off a Silverado LT? That perception shift is powerful, and once buyers realize they can push back, they'll expect discounts everywhere. That means Ford and Ram won't just feel pressure from GM, they'll feel it from their own customers demanding deals. Now let's throw some historical context into the mix. The last time we saw a true truck price war like this was back in the late 2000s during the financial crisis, when automakers were desperate to move inventory. Back then, we saw rebates, 0% financing, and even buy-one-get-one style deals where you could practically drive off the lot with a new truck and a second vehicle. It was chaos. Fast forward to the 2020s, and we've been living through the exact opposite: no inventory markups and sky-high prices. This GM move might signal we're swinging back toward that 2008 to 2010 style market, where buyers hold the power and automakers are throwing money on the hood just to get you in the driver's seat. And speaking of dealers, let's not forget they're caught in the middle. On one hand, they finally have inventory again, which is good. On the other hand, the longer trucks sit, the more they pay in financing charges to keep them on the lot. A price cut from the factory gives them breathing room, but it also means they'll have to deal with angry recent buyers who paid more just a few months ago. Imagine dropping 60 grand on a Silverado last spring, only to see your neighbor roll off the lot today with the same truck for 50. That's going to sting. Expect some frustration, some complaints, and maybe even some blowback at dealerships. Let's also factor in leasing. Leasing has been dead for a while because sky-high prices and high money factors made it unattractive. But with lower MSRPs and potential incentives from Ford and Ram coming soon, leasing could make a comeback. And that matters, because leasing drives long-term brand loyalty. If GM gets more people into leases today, that means more repeat Silverado buyers in 3 years. That's how you lock in market share, and that's another angle to why this move is so aggressive. But let's not sugarcoat it. This also sends a warning sign about the broader auto market. Trucks are the most profitable segment in North America. If GM feels the need to cut prices here, that's a red flag that the market is cooling faster than analysts expected. And if trucks are struggling, you can bet SUVs and crossovers are next. We may be witnessing the start of a broad reset across the auto industry, where inflated prices from the last few years finally come back down to earth. So what about the ripple effect internationally? Well, in Canada, Silverado and Sierra are also volume sellers, and Canadian dealers are already seeing inventory pile up. Expect similar discounts north of the border. In Mexico, where pickup sales are strong but heavily price-sensitive, this kind of cut could give GM a major advantage. Globally, it's less of an issue since Silverado is primarily a North American story, but it shows that U.S. automakers are under enough pressure at home that they're forced to rethink pricing strategy. And here's a curveball. How will Wall Street react? Investors love high profit margins, and GM just announced they're willingly slicing those margins on their best-selling product. Will Wall Street see this as a smart move to protect market share, or as a sign that GM is desperate and the market is weakening? That's going to be a big storyline in the next few weeks as analysts digest the news. For truck buyers, though, this is win-win. Even if you're a Ford or Ram loyalist, GM just did you a favor. Because Ford and Ram cannot sit this out. Competition will force them to sweeten deals, which means even if you never set foot in a Chevy showroom, you'll still benefit from GM's move. This is why price wars are so powerful. They don't just affect one brand, they reset the whole market. And if you're wondering about timing, here's my advice. If you need a truck today, go shopping now. The deals are real, the discounts are live, and dealers are motivated. But if you can wait a few months, the pressure on Ford and Ram is only going to grow. By the end of this year, we could be looking at across-the-board incentives that make 2025 one of the best years in a decade to buy a truck. Looking ahead into 2025 and 2026, the full-size truck battlefield is shaping up to be one of the most competitive we've ever seen. GM's move to slash Silverado prices is not just about today's buyers, it's about positioning for the next 2 years, when new models, refreshed powertrains, and EV trucks all collide for market share. Let's talk forecasts. Industry analysts were already predicting that truck sales in 2025 might soften by 5% to 7% compared to 2023's highs. Why? Because of affordability. Average transaction prices across the auto market have climbed to record levels, and buyers are stretched thin. Add in Ford, meanwhile, has a massive refresh strategy lined up. The 2025 F-150 just got its mid-cycle update, and Ford has a lot riding on new trims, better interiors, and that Pro Access tailgate marketing push. But if Chevy undercuts them by $10,000, Ford will need more than a fancy tailgate to compete. Expect Ford to roll out creative incentive packages, like combining low APR financing with cashback or offering aggressive trade-in bonuses. They've done it before, and they'll do it again because Ford cannot risk Silverado stealing away even a fraction of its F-150 dominance. And then there's Ram. The all-new 2025 Ram 1500 with the Hurricane engine is supposed to be their next big leap. It's powerful, it's smooth, and it's loaded with technology. But new tech usually means higher prices, and higher prices don't look so great when your competitor just pulled a price drop nuke. Ram will almost certainly lean on aggressive lease deals, especially in markets where they're strongest like Texas and the Midwest. Stellantis has used leasing as a weapon before, and don't be surprised if you see $399 or $429 a month lease ads on a Ram Bighorn plastered everywhere. It's a way to protect their premium pricing image while still giving buyers an affordable entry point. Now let's not ignore the EV elephant in the room. Electric trucks were supposed to be the next big frontier. Silverado EV, F-150 Lightning, Tesla Cybertruck, Ram Rev. But the truth is, sales are crawling, not sprinting. High sticker prices, charging concerns, and lukewarm demand mean EV trucks aren't moving the needle the way automakers hoped. The Silverado EV RST First Edition was priced at over $100,000. Ford Lightning prices climbed dramatically after launch. Cybertruck, limited availability, and a six-figure price for the higher trims. That means gas trucks are still the profit engines of Detroit. By slashing prices on Silverado, GM is essentially saying, we're doubling down on what pays the bills while we figure out the EV side. And that's smart because if they lose ground on gas trucks now, they won't have the cash flow to keep funding their EV transition. But there's another layer here: dealerships. Dealers have been living in two very different realities over the past 5 years. In 2020 and 2021, they had no inventory, buyers were desperate, and markups were the norm. Now, in late 2024 and into 2025, lots are overflowing, and dealers are watching their financing costs skyrocket as trucks sit unsold. Every day a Silverado sits on a lot, that dealer pays interest on it through what's called floor plan financing. If they have 200 trucks sitting out back, that's thousands of dollars bleeding every week. GM's price cut is a lifeline for those dealers. It gives them a talking point, it draws shoppers back into showrooms, and it helps them avoid the nightmare of having to slash prices themselves and eat the loss. But here's the flip side. Recent buyers are going to be angry. Imagine you bought a Silverado in June for $53,000, and now your neighbor drives home with the exact same truck for $43,000. That's a gut punch. Expect dealerships to face tough conversations, frustrated customers, and maybe even some canceled orders. This is the cost of a price war. Someone always feels burned. Now let's run through some buyer scenarios so viewers can see exactly how this plays out in real life. Scenario 1. Cash buyer. If you're sitting on cash, congratulations, this is your time to shine. A $10,000 cut is $10,000 saved, no strings attached. You can walk into a dealership, negotiate even further off the new MSRP, and walk out with one of the best deals we've seen in years. Cash buyers are the real winners here because they're not worried about high interest rates or financing gimmicks.